Welcome everybody. I'm just going to step away for just 1 second, just finishing another class, and then we will get to rolling here soon. I will be right back. Okay, I am back. Welcome everyone. How we doing? Doing good, doing good. Welcome everybody. We'll give this a couple minutes. Like I said, I was just finishing another class. Scotty, I still owe you a DM. Don't worry, I have not forgotten about you. I'm gonna get back to you. Um, you sent some really good stuff. So Rob's minus 70%. We got Leo in here. We'll give it a couple extra minutes to let people roll again. JT, there we go. Love it. Pat, how we doing? Welcome everybody. How'd everybody's day go? Pretty fun one. Great upside money, good downside money a couple times. Not so much when you look at the chart, but yeah, that minus 70%, that's been a good joke. That's a good one. I love it, Rudy. I know you're always here. I love to see you just jump from mastermind right on over. That's good stuff. Post going, and then we will get to rolling. Things real quick. 1 second. Okay, and let's get rolling. Is this recording going? Yeah, it's auto. It's auto here. Welcome everybody. Happy to have you here, Dirty River. Tonight we are going to be talking trading trends. It's one of those things that you would think they would just be the easiest thing in the world to trade. You just buy or sell or whatever and just hold on. And unfortunately, when it comes down to trading them, they can be a very difficult thing to trade. You know, you never know how long they're going to go. You never know when they're going to start, when they're going to end. They oftentimes will come out of nowhere. So what I'm going to talk about today is one, trade management when we are in a trade. And trying to catch a trend move, or at least, maybe we found ourselves in a trade and we start to wonder, is this the beginning of a trade? So a lot of what tonight's class is going to be is just more focused on price action, what the charts are actually telling us, how we can manage our trades once we are in them. And then what we're going to start with for me is just a very, very simple way to ideally identify a potential. Well, really, you're identifying a range early, but by identifying that range early, you also have the potential to be identifying the trend early. And so many of you have heard me talk about it, and I talk about the opening range all the time. That's the first hour and a half of the day. What we're going to talk about now is a little bit different. It's something that, I mean, I can't say that I made it up. I'm nothing in the stock market is ever new. Somebody has always done it before, but it's just something that I've noticed and identified with talking through people a whole bunch, that is a very, very easy way to identify range early or potential breakout with a trend early. So what I tell people to do, and you never know if a trend is going to happen, the first candle of the day. Do sometimes they happen? Yes. But honestly, statistically speaking, the first candle of the day has a 50-50 chance of reversing. That's what statistics tell us. So we can't really identify it, first, second, third candle of the day. Well, my little trick that I've been teaching people over the last few months as a way to just make it easy on your eyes is I go to the hourly chart. And then you can see on Thinkorswim, our first hourly candle of the day is actually half in pre-market and half after market opens. So if you're on Thinkorswim, you want to go to your hourly chart and then just draw a box around it. You can do this every single day. I've realized I like to have that first 30 minutes of pre-market included in there. However, Thinkorswim, most brokerages, and it makes sense, their hourly candles close on the hour. So you will have a candle that covers from, I'm on the West Coast, so you'll have a candle that covers from 6 a.m. to 7 a.m. For whatever reason, on like Webull, they do it on the half hour. So really what you're trying to identify is a candle that is showing you 30 minutes before market open and 30 minutes after market open. And we want to slap that on as a potential range. If we are spending most of our time within there, then we know that we're in a range, and we've identified that within the first 30 minutes of the day. So it's just a really powerful little tool to let us know, are we range trading or are we potentially, trend trading? And it makes it so we don't have to guess. We also get to use a couple few statistics to help us out on these trades. So today, obviously, amazing trend all day long. If you're on the right side of it, great. Well, these first candles, we're going to talk a little bit about them here in a minute, but these first candles of the day, let's be real here, they aren't really providing you an entry. Could you be trying to buy these pullbacks? Sure. Did maybe you sneak in here right at the bottom? This is the only entry I see, because you got your 20 EMA, you got your VWAP, you got your hourly 20, you have your uptrend. So entry down here, if you were lucky enough to sneak in there on the second candle of the day, awesome. I wasn't even trading at that point. So awesome if you were able to sneak in there. If you weren't, there wasn't really any entries provided long here. We can look at these candles and we can say to ourselves, bullish candle, not super bullish, right back to bullish, bullish. And then this one finally shows us, okay, maybe we're going to slow down a little bit. Well, this is also the top of that little range that I told you to draw, and it's just a super simple thing to identify. Well, now we have our range drawn. We've broken out of our range. So statistically, we're looking for uptrend to bullish range because, on a day like this, and we're going to go do another day just to look at it. We're looking for uptrend to bullish range, where maybe we're ranging, but maybe we're grinding up the whole time. And all of a sudden, we're provided an entry. We've broken out of this range. We know we've broken out of this range. Here is our first reasonable entry of the day. Why is this a reasonable entry? Because if we enter here, our stops are just right down here. Very tight stop for this, a buck or whatever below us. Ultimate goal is going to be this 542.62. Maybe it can keep going after that, maybe it can't, but this is going to be our main target. Of course, in the wild market we have right now, you don't always want to expect that type of a run, but to happen in 15 minutes. I mean, you don't always expect that to happen, but we've identified our entry. We've identified a potential trend within the first 30 minutes of the day. So now we can put a trade on, and now we get to manage this trade. And that is where trading trends starts to become very difficult for us. This is, just one type of trend we're going to talk about, strong bullish trend. No questions asked here. So not a lot of entries provided. If we take this entry, now we get to manage this trade and ride this trend. For this example, I'm going to encourage you to kind of ignore the numbers on the side of the chart because let's be real here, 12 bucks, 13 bucks up, whatever it was, not normal. We're more want to focus on what the chart is telling us. Well, we enter for our trend trade and we start getting breakout candles. We get the push up to exactly about where we would expect, So I'm going to teach you a second thing right now. People have heard me talk about it. I was actually talking about it in DMs with somebody today. It's the idea of something known as a measured move. So one of the issues we have with trends as I was starting, you just never know how long they are going to go. So we want to try to use statistics or things like that to say, how long do we really think this trend can go for? If we don't have a lot of levels or we don't have EMAs or things to act as price targets, we want to have at least some sort of statistical thing to tell us what's the chance of this continuing and how far can it possibly go. So what a measured move is we want to identify our range that we had. We've done that with our gray box and now we measure it. I just use the trend line tool on Thinkorswim. It makes it nice and easy. $4.20. That is our measured move. So from here to here is $4. So now statistically, a lot of the times the market will like to make that move again. Again, this is unfortunate because the moves are so big. Do you typically want to look for an $8 move on SPY in a day? No, but you're able to apply this on smaller moves, bigger moves. It doesn't matter. Well, we can drag our tool up again and we can say $4.20. You might notice that we had this nice move, then we have this nice move, and where does the market stop? Where does the market finally find a stopping point? It just so happens to be right at the measured move. It is not always going to be that precise, but once we are in our trade and we manage our trade and we trim where we should trim, we're able to hold through these pullbacks if we're still looking for more of a trade on the trend. Obviously, do you necessarily want to hold through a $3 pullback? No, but in a normal market, couple candle pullback, nothing to panic about. So what's a way we can kind of hold these trades and have a little bit less fear with them? Well, the easiest way is bump up your time frame. You know, on the 5 minute, we were seeing some volatility, we were seeing pullbacks. Well, if we start looking at this 15-minute chart and we're in this for our trend trade, we take our nice entry. This candle doesn't tell us to stop out. I mean, you could stop out, but you've trimmed nice. You're in finance positions. This candle definitely does not tell you to stop out. Nope, 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 nope. We can stick with this trade. You know, we're just consolidating at a level. Even if we bump it up to a higher time frame, all of a sudden, this starts to look much more holdable. You know, do we have big wicks on the top and some big wicks on the bottom? Yes. All that is telling us is consolidation. Well, how do we start to manage these better? What I like to tell people to do is use the candles. This is going to be one of the most important things that I teach you tonight in regards to trading trends. Use the candles to tell you where to move your stops to. You take your entry here, obviously you trim here, you get a nice pullback candle that ultimately goes up and closes green. Here's your new stop. You keep riding these things, you let them work, you let it work. You know, this is a longer day trade. This is not a scalp. You know, you're in it, you've trimmed, you have some financing going on. The market is not telling you to stop out of this trade yet. You move your stop here and you do not vary from the plan. Is there plenty of scalps to be had throughout this? Of course, we aren't talking about those right now. Then you finally get another breakout candle. Here's where your stop goes. Always adjust your stops to the bottoms of the breakouts. And you know, when you're trading in trends, always adjust your stop to the bottom of breakout candles. And what do I mean by a breakout candle? When you get, you know, a bullish candle closing near its high and you're trading a bullish trend and you get another bullish candle closing near its high, you now likely want to trim and you likely want to move your stop to the bottom of that breakout candle. And why do we move our stop to the bottom of the breakout candle? Because if we know if the market reverses below there after the breakout, there's a very good chance that it's a failed breakout and the market is now going to reverse. And we continue to let these candles work. Obviously, this is a massive move on SPY. We're moving up to our daily trend. We always need to be aware of those areas and where we want to be potentially exiting these trades. But we always want to let the charts tell us when to get in and when to move our stops and when to exit the trades. You know, if you're sitting there and you're staring at your PL and you're getting worried and you're on your 5 minute chart or you're on your 1 minute chart and you start seeing these like slightly aggressive pullbacks, it can worry you out of a trade that you don't need to get worried out of. So if you ever start feeling that fear, and you know, we're a strong trend day. The market hasn't told us, you know, that it's going to reverse. Plenty of short scalps. We hit a couple of those. You use the candles to tell you what to do. And if you're looking at your 5 minute chart and you start getting worried, jump to the 15 minute. Say, should I be worried? If you still aren't sure, jump to the 30 minute. Start to ask yourself, should I be worried? And if you should not be worried, do not worry yourself out of the trade. Again, you get to the hourly chart, all of a sudden those pullbacks are just consolidation and you have nothing to worry about here. But we have moved our stop up. You know, we enter here, we take our trim here, our stop is above break even. We no longer have risk on the trade. The only risk we have on the trade is profits. That's it. So if we give back some profits, that's fine. But we let the charts tell us what to do is the most important thing we can do. Yeah, Rob's, I'm the same. I see a couple of people. I'm going to try to answer these real quick. I always have the 5 and 15 minute pulled up as well myself. But I have more screens. I understand not everybody does that. So always consult a longer time frame before you make any decision, especially on a nice strong trend day. But so I saw we had a couple of questions here. So yeah, the VIX went to 26, but that's actually down dramatically. So the crush that we're seeing on the VIX, just a real quick side note, the crush that we're on the VIX, this is not helpful for trading. This is decreasing the value of our contracts even if our contracts are moving in the right direction. That's why we aren't making very nice gains, even on nice big moves. So we're getting clobbered by VIX right now with how much it's dropping. It's really just a battle for us. So next one, how do you know it's not going to fully pull back? You don't, but you let the chart tell you what decisions to make. If we knew, oh, the market's going to pull back or the market's going to dump here, trading would be easy and we wouldn't have to worry about it. We just have to let the charts tell us what to do and use those big breakout candles. As I said, bullish candles closing above the midpoint, closing above previous highs, closing near their highs. That's where we want to start bumping stops. So that's what I would do. You know, if I was in this trade, I was treating it as a trend trade. I wasn't scalping the ups and downs, which I'm always going to be scalping the ups and downs. I make more money that way than just trying to hold all day, you know. We get a nice push breakup, you know, we get a nice move up, we get nice pushes back up. I'm likely moving my stop here. We get another nice push up, I'm moving my stop here. Another nice push up, I'm likely moving my stop here, and I more than likely get stopped out. But I caught the bulk of the trade. Something that I talk a lot about in trades, if you're scalping, you're looking for 1, 2, 3, 5 minute candles. That's really all you're looking for. If you're day trading, you know, trading strong trends, that's when you can start to look for maybe, you know, your 10, 20 candle trends before a pullback. You know, even on a 5 minute, maybe you'll get those 20, 30 candle trends. But you start watching a 15 minute, you know, and you're getting, you know, 3, 4, 5, 6 candles of nice trending. That's where you can start to say the market might take a breather, but you stick with the trend. This was obviously, you know, very strong bullish trend, didn't offer a whole lot of entries. So we had to wait for our entry to show up. Could you have been buying some of these pullbacks? Yes, but it's still not something I would recommend because like we said, we don't know how long the trend is going to go. However, we can use this every single day in the market. So again, if we just go to our hourly charts, we look at our first hourly candle, we slap our range around our hourly candle, you know, our first hourly candle of the day, again, first half hour pre-market and first half hour or last half hour pre-market, first half hour trading in the market. Now we start to look for breaks and retests of our range to short. This one offers a great entry. Offers a nice little bounce up for or you know, sell down for a trim, bounce up to still trade in the trade. Offers a nice little trim again, sells down to some lows, offers a nice little trim again. Obviously, as it bounces back up, you're going to get stopped out on the way up. But this will help you identify a potential trend or breakout every single day. And if we're spending all of our time between it, then we know that we're ranging. So I'm just going to go through and I'm just going to, you know, put these boxes around a couple of these just to show the power. And then we'll go back on our 5 minute charts just to show the power of one, identifying ranges, and two, identifying potential trends. So there we go. Got a few of those days. So obviously we already did today, worked really well. Go back to yesterday. Is it a massive trend? No, but it's a nice $3, $4 move down. Market gives you 3 legs down. Very, very common thing to look for. Nice little trend down off of our, you know, obvious range break. Day before, we get the breakout, we get multiple retests, and we start trading the trend up. As we're, you know, we again can go to longer time frames, all of that to confirm we want to stay in the trade, move those stops up based upon the breakout candles, and catch the trends. I know that it's very it's very easy to look back at these charts and say, you know, I would have done this, that, or the other thing, whatever it might be. But always let the charts tell us what to do. If the breakdown comes, we short the bounces. We target to our levels. We let the market tell us how to trade. We don't ever want to let our emotions tell us how to trade. Oh, nice. Here's a good one. So breakdown, retest, we get a nice little entry. Well, we bounce back into it. Did we catch a little bit of a trend here? You know, did we catch a little bit of a trend here? Absolutely. Ultimately, we turned around, set a higher low. You should be stopping out of this trade. Now we find ourselves right back in the range where we're buying dips and we're trying to short rips at these highs. So this little box will give you the power in, the first 30 minutes of the day to say, are we trending? Are we ranging? What are we doing? And where should I stop out? Where should I take the entries? Can I use my measured moves? I always recommend getting an idea of what you can potentially look for, because if you don't have targets on your trends, then you really don't know what you're going to do. And so, this one, again, it's oftentimes they will be pretty nice, $5.30 down, to another $5.30 down. So always use the tools that we've been teaching, the tools that we've been learning in all of these lectures to help us out. We get breakouts and we get retests. We take these trades looking for trending moves to the upside. When we've broken out, we know statistically we're now looking for either a trend up or bullish, bullish chop. Or if we get a breakdown, we're looking for a trend down or bearish chop. Use those measured moves to identify, the potential that you could get. Obviously, sometimes it's going to go way beyond your potential. Other times you're going to get half of it. But let the chart tell you what to do. Does last week's high affect the next week prices going up? I mean, kinda, sorta. You can always look at a weekly candle, and if you're, breaking the previous week's high, you can kind of use that as a potential entry and with tight stops for some more upside movement. But it doesn't, just because a candle closes high doesn't mean it's going to keep going high or nothing like that. Yeah, do I draw trends like these for scalping? Absolutely. But we aren't really talking scalping tonight. We're trying to focus more on trading trending markets. But yes, all trends matter, whether you're scalping, day trading, or swinging. I mean, the most obvious thing in a trend is if you're trading the trend down and you've caught this nice breakout, you're trimming, and you're finding yourself back above the trend, then, maybe you're going to get the pullback, reset on the trend, but the trend tells you when the trend is ending. Once you're back above that trend, your trend has likely ended on you. So we just want to we want to let the market tell us, okay, we've broken down from our range that we were trading in from our first hourly candle. We know about the area where we want to be looking short, and we know our targets, some previous lows. And then this type of thing can give you the best possible entry for a trend with reasons. Then maybe you get just a tight little channel like this and you're just trailing your stops to the highs of these candles. Every one of these candles is a new trend candle, bearish, closing near its lows. These can start to become your stop losses. There's a nice big breakdown. These start to become your stop losses. So you always want to let the chart tell you what to do. We're nowhere near this trend, but if we're this trend line, but if we are in this trend, then we want the candles to tell us what to do. We don't want our emotions to tell us what to do. We don't want none of that. We want the market to tell us what to do. The market has broken down from a range. The market only does two things. It ranges and it trends. So if we're able to catch the breakout of the range, then we trade the trend. If we're just trading within the range, we're just scalping within the range, you don't want to be looking for trend trades when the market is not showing you trending activity. When you have a lot of overlapping candles, you got some bullish ones closing near their highs, bearish closing near their lows, some dojis or just indecision candles. Again, close at highs, close at lows, close at highs, doji, close near lows, close near lows. This is all range trading activity. Then we break that range and we start to say, okay, we short highs and we ride trends down because we have broken the range. That's the most important thing we can do. But we always use trend lines. I always use trend lines. Even maybe you're taking entries off them, maybe you aren't taking entries off of them, but they're at the very least saying, if I'm trading a downtrend and we start trading above that trend, I no longer want to be trading the downtrend. Trend lines on the 15 or the 5 minute. Up to you. I draw them on the 5 minute for accuracy. Because since I always go wick to wick and I never go body to body or anything like that, you can see sometimes your wick is going to hit a body. But I always want wick to wick. And so when I draw a trend line on the 5 minute, I get more detail from drawing it on the 5 minute than I get from drawing it on the 15 minute, because we can really identify those wicks a bit better. But draw them on whatever you feel comfortable doing. I just like to draw them on the 5 minute because I can get that finer detail when I am drawing them. So again, when we're trading trends and we're trying to catch trending movement, we always need to let the market tell us what to do. So again, maybe we catch this nice downtrend. Well, it has started reversing on us. They've bought us back up. Well, trend break retests are one of my favorite patterns. Trend break retest at a major level. And now you're really, really getting into one of my favorite patterns in the market. And when you have trend break retest that is also a higher low, now I start looking for a reversal. So I'm a dip buyer down here. Technically speaking, the trend is all down, but trend overall on the day is down. Yes, but the greatest risk reward on the market right here, even in the weak market, is to buy this dip. So now we again do the same thing and manage this as a trend trade. We've bought the dip, we get breakout candles, we move our stop. We trim at levels, we trim at previous highs, but when we get breakout candles, and what I mean by a breakout candle, strong candle, if we're bullish, bullish candle, closing near its high, you can have a big wick on the bottom, small wick on top, great, move your stop to here. Another big breakout candle, move your stop to here. Obviously, you're pushing into EMAs, VWAP, all of that, you should be trimming, but, trends are your friend. Sometimes it may feel like you're fighting the trend, but you always have to ask yourself, what makes a trend? A higher low or a lower low? Here we had a high, here we had a lower high, here we had a low, here we had a higher low. Those are what identify us as a trend. So whatever time frame you're drawing on, anything like that, always let the trend tell you what to do. Without a strong trend, you cannot trade in a trending market, because if there's no trend to be traded, then you don't go looking for trend trades. But when the market starts setting higher lows, you start getting bullish candles or bearish candles, whatever it is, you let that chart tell you what to do. Again, if you start getting worried on candles, you go to these longer time frames, but always let the chart tell you what to do. We all paper hand on days like this. We all do those kinds of things. It's going to continue to happen no matter what. Nobody ever holds for the whole trend unless they're an idiot or they're a liar. Those are the only two times that people will actually hold for these whole things. Everybody wants to say they held from highs to lows or whatever, but they very often don't sell the lows, give back a lot of profits if they actually do hold that long, or they took a scalp and they didn't even hold that long and they just talk about how they shorted the highs. That's the truth of it. We want to let the charts tell us what to do. We want to manage our stops based on the charts, but no matter what, in volatility, which you experience in trends, you're very oftentimes going to end up, paper handing or whatever it is. But let the chart dictate what to do always. And then, like I said, the two tricks that I'm really, the two tricks to catching trends, in my opinion, that and actually, profiting on them well. And, I personally don't like trading trends. I'd rather take, 4 trades that pay me 25% than 1 trade that pays me 100%. I got to hold through all the volatility. But the two things that I really want you to learn from this lecture, super simple. The hourly candle, get your box around that. You start to find those breakouts, and now let the chart dictate what to do. We've broken out, we've retested, we now short, we have lower highs forming. I mean, we have them from up here, but we also have lower highs forming from right here. Of course, we're way away from the trend. We take our short, we of course trim at our targets, but we start to manage based on the candles. Big breakdown candles, we move our stops. Big breakdown candles closing at lows, we move our stops. We move our stops. and do this over and over and over again. We move our stops. I mean, you should be trimming at levels always. You're coming into 500, you should be trimming. Worst case scenario, you get stopped out here. But letting the chart tell you what to do is the most crucial thing you can do for actually catching a trend trade. Don't get me wrong, I'm the type of trader that if I'm short here, I'm out here, I'll short this next bounce. And then I might be out here. I've now made more money than the person who held to right here. That's just how I prefer to trade. But if you don't like to trade, if you don't like to take the quick movement and you do like to hold your trades a little longer, maybe you trade with time, things like that. Let these candles dictate what to do. And you will find yourself able to hold those trending trades much, much longer. And so with that, I want to talk through this quick. I want to try to give us, 20 or so minutes, 15, 20 minutes. That's about what we got here. For you guys to ask questions because, you know, like I said, and like we always talk in these, in classes or voice chats or things like that. When we're hindsight trading, it's super easy to talk about, what we would have done. However, when it's time to actually dive in on the market, do we do that? That's where it starts to get really hard, And so I wanted to leave you guys with some questions. Leave us plenty of time for questions. Maybe we can look at other charts. Maybe we can look at some trades that you guys took. Even if you just want to go back and see some more examples of using this first hourly candle and then using the charts to tell you how to trade it. I want to leave it up to you guys. I did see that I saw that yeah, crash. And John, I'm on the 15-minute, just fine. I use the wick. So I would ish question about John. I use pre-market trends all the time. You can see them on my charts. If we go back through my charts, you will see them all the time. I depends how big the trend is. If I'm identifying this trend going into the open, then I'm only going to use maybe whatever this is, that 2 hours before open. If we have a nice big, let's see if I can find one. A whole pre-market trend. Yeah, I mean, this is even a bigger one. A whole, most of a pre-market trend forming here, then I'm going to draw it there. And again, here's our hourly box. Here's our trend break. It just gives us additional confirmation. So yeah, I use pre-market trends all the time. Oh, maybe you're talking about my candle. My candle, yes. 30 minutes of pre-market, 30 minutes of after open. If you are on Webull, your hourly candles will be different than that. If you're on Thinkorswim, that's what it'll give you. For whatever reason, Webull closes their hourly candles it's 6:30 to 7:30. They probably are trying to do it because of that's when the I'm West Coast, East Coast time, 9:30 to 10:30 is for market open. I guess that's probably why they do it. It makes no sense to me. An hour is an hour, 6 to 7 is an hour. That's how I think about it. So on Thinkorswim, you're going to have that 30 minutes of pre-market, which I like to include in that hourly candle. When I started playing with this, that was what I noticed was I liked having, big stuff happens in that 30 minutes before open. People start positioning, things start happening in the market. So I want to be aware of that. And then you get that first 30 minutes after market open, and you can really get a lot of information from it. Do I use RSI? Absolutely not. Is there a time and a place for it? Sure. It's on the daily time frame. It's not intraday. It is I mean, virtually useless intraday, in my opinion, and also RSI has this, it's got a huge issue, its name, relative strength. So, people look, oh, it's overbought. I'm going to short it. Well, it's showing you relative strength. So if RSI is high, that just means the market has a lot of strength. And so shorting it is just not smart, So to me, RSI is mostly useless. You'll never see it on a short time frame chart on mine. I will occasionally check it on large time frames, but I'm talking weekly RSI. I have little to no interest in any short time frame RSI just because it is so rife with fake outs and uselessness. I know that some people, you can find some really interesting things using it. Like first candle of the day, maybe you get a blowout of a B band, you get extremely oversold, and you want to take that scalp against it. Fine, but taking RSI off your chart will do nothing but help you, at least in my opinion. Most effective tools. I mean, if you gun to my head, I got to pick two: VWAP, hourly 20, no questions asked. You can see on my chart very few indicators. Obviously, this is a ribbon, so it looks like more than it is. But if I have the study without the ribbon. If I take that off, I have VWAP is this pink line. I have the 50 EMA as the yellow line. I have the 20 EMA as this orange line. And then this stair-steppy one is the hourly 20 EMA. I use, well, four indicators, but two of them are the same, just different time frames. Too many indicators will kill you, less is always more. If I had to pick two, it's going to be VWAP and hourly 20, no questions asked. Not on topic. Well, I'm lucky. I did this for a long time, not a long time, but years before I ever touched an option. So the FOMO, greed, chasing, all of that stuff, I just don't have it, One of the main issues that people have emotionally is they don't trade their plans. And they don't make a plan. They just enter a trade and they don't think about it. They don't care where they're entering. They don't care where they're stopping out. They don't care where they're taking profit. And so they're failing from the beginning. So if you build a good plan and you say, I want to buy, if this triple bottoms, I want to buy calls. So you know where your entry is. And then you say, if we break below here, I know where my stop at is. And I'm going to sell my calls right here. Well, you know how much you're going to pay, you know how much you're going to lose, and you know how much you can potentially make. There's nothing when you have a plan, there is nothing to be emotional over because you already know the outcomes. There's only two outcomes: you lose money or you make money. And if you know how much you can lose and you know how much you can make, there's nothing to be emotional over because you already know the outcomes before you enter the trade. So the number one way to deal with emotions is have a plan. The main time, the times that people get emotional, you have no plan or you're in too heavy. Those are the two things that people get emotional over. And if you don't have those, you're going to get wrecked in trading. You'll never succeed at trading if you don't start building trade plans, and you will never control your emotions when you have no plan. You're seeing big green candles and your input, so you're stopping out of your puts, but you're going to buy calls because the candles are green. You're going to get wrecked. You need to have your plan. You need to have your plan in place before it presents itself. Like if I'm trading this, and of course, again, it's hindsight trading. I'm trading this. I've seen a push up. I've seen a failed breakdown, and then I've seen another push up. I'm looking at this and saying, when we're up here, I'm saying if we pull back to 521, I'm buying this triple bottom. And I'm saying that up here. I have 30 minutes to watch the market before my entry presents itself. I can do all the math I need to do of, where my stop out is, how much I assume I'm going to be paying when we get back down there, what my potential reward is. And I have 30 minutes to figure that out. So build a plan and your emotions go away because there's nothing to be emotional over because you already know the outcomes before they come. Yeah, Rob's exactly. Too many indicators is just confusion, and I think indicators are great. I use them different than most people. Very rarely am I going to take a trade based on a 9 EMA, a 20 EMA, things like that, because they fail. They oftentimes fail. They don't have huge success rates. So I frequently use them as targets. If I'm buying dips, I'm looking for the move back to the EMA. If I'm shorting rips, I'm looking for the moves back to the EMA as the place to potentially take the exit on the trade. So yeah, too many indicators is just sort of a death wish. MACD, well, I hate it equally as much as I hate RSI. It's just something that I have never I have never once found use in using the MACD. I know MACD RSI is a favorite combo for retail traders. It's just not effective. You know, it doesn't, they don't have high success rates. They don't take certain things in the market to consider into consideration. And so they are things that have just never found a place in my, you know, in my trading. Like a MACD, most people don't even know what it is. It's moving average convergence. And if I want to see if my moving averages are converging, I'm going to look at my moving averages and see if they're converging or diverging, you know? And so it's just a tool that I've never found use in. I've never found success in. If it works for you, I'm not saying, you know, stop using it or anything like that, but it's something that I have never, ever, ever found use for. Most people, they take those MACDs off, they take those RSIs off, they start finding more success in trading. As I teach all the time, simple is better. Get yourself a couple EMAs, really practice trading support and resistance, really practice trading trends and drawing trend lines. And you have all of the powers you need to be a successful trader. You know, I think all those trading views, what's the one I hate, Trend Spider, those people, they're scamming everybody. You know, they're charging people for platforms that all you can do is chart on them, and their selling point is unique indicators. Well, if they're so unique, nobody's really using them. And if nobody's really using them, they likely don't have a very high success rate, or they aren't useful in the market. So we as traders in the market, I don't care if you're a scalper, if you're a day trader, if you're a swing trader, we need to let the actual charts dictate what to do for us, not an indicator. You know, we've all seen RSI just ride 70 all day long. They keep on buying, buying, buying nonstop. We've all seen market getting throttled. RSI is bottomed out and they keep on selling. You know, if you're an RSI trader, you're fighting it. If you're trading the chart, you're looking at the chart, setting lower highs, setting lower lows, whatever it is, and you're letting the chart dictate what to do, you will have 1,000 times more success than you would trying to rely on indicators like that. So the reason I focus on things like EMAs and like VWAP is they are showing us in a very quick view where big money is positioned and where they have been trading. You know, VWAP, volume weighted average price. Based on volume, what is the average price paid? And we know that all volume in the market, not all, but you know, a very large percentage of volume in the market is algos and big money. Retail traders are not the volume in the market. So when we look at volume or VWAP, we know the average price that big money is in at. So if we're trading above that VWAP, we know that the people long big money are making money. If we're below that VWAP, we know that the big money people are making money. And that's really big picture. If we start looking at the hourly or looking at our 20 EMAs, our 50 EMAs, that's a slightly smaller picture. You know, a 20 EMA is giving you kind of average prices over the last 20 candles. So if you're looking at the 5 minute, you're looking back average price for the past hour. If they're sideways, these things are telling us that we're chopping. They start trending and market starts trending. So stick to the things that actually give you usable information from the people you want to follow, which is big money and hedge funds. You know, it does a hedge fund have a 20 EMA on their chart? Absolutely not, because they are the 20 EMA. They don't need to be told, you know, those average prices over the last 20 candles with a little bit of emphasis on the closer candles, because they are that data. So of course, big money is not going to use an EMA. They are the EMA. We as retail traders use them to track what the big money people are doing. So minimize things on your chart, get rid of your MACDs, get rid of all of that stuff, and you'll find yourself a lot happier. So on VWAP, the -2 +2, can you guys, let's see. Do you guys see this when I pull this up? So the -2 +2 right here, we are we're not concerned with this. What this is actually showing us is on real VWAP, they don't have it on like Webull or things like that, but on Thinkorswim, real VWAP has an upper and a lower band, similar to a B band. And so this -2 +2 is if you have these turned on, uh, if you have these turned on, then you're gonna have bands. I'll just turn them on and show you. They're hideous. I don't use them. So if you have these turned on, let me go to, give me a second. You see this ugly pink line and this yellow line? Those are two standard deviations from the VWAP. So that's all that's showing us. I turn those off. I'm not concerned with those. Do they work? Sure. But if I want to trade a standard deviation, I trade, yeah, it's terrible. If I want to trade a standard deviation, I trade B bands. They are also horrible to look at, but I find them much more effective. So if I want to trade a standard deviation indicator, I'm going to use B bands personally over VWAP. So we don't really need to be concerned with those plus or minus deviations on those. Does time and sales effectively work to you? See institutions buying? No. And so we're actually having this discussion in Mastermind today. I mean, yes. You know, yes, because volume in the market is big money. But the issue with time and sales, and this is something that I've been trying to really get across to people. One, it's extremely misunderstood. First off, green does not mean buying. Red does not mean selling. Got to get that out there first. Second, time and sales, those orders are filled. They're done. They're done. Whatever effect they're going to have on the market has already happened. So by watching time and sales, you're basically seeing delayed data because those orders were placed, those orders were filled, and now whatever effect they're going to have on the market, they have already had that effect on the market. So time and sales is not, you see the orders, you can see those orders getting filled. If you want to see what is happening in the market and waiting to happen, you have to use level 2. Those are the orders that are on the book waiting to be filled. Then the only way to know if a buy order or a sell, like the only way to know 100% for a fact if it is a buy or a sell order on the time and sales is if you see an order sitting on the ask side for, say, it says 20 down here. And, we know we have to times by 100 when we're looking at level 2 because these are actually lots. It's not one share. This is 100 shares. We see 20 down here. So we know we're looking for 2,000 shares. We've seen the price they're trying to sell it at. And then we see 2,000 shares filled at this price, and we see it on the time and sales. We know it came from the ask side. We know that is a sell. So that's the only way to really know what is going on in level 2s or in time and sales is to match them with your level 2s. Me personally, I rarely have time and sales up. I have level 2 up frequently because I will use it, say I'm trading SPY and I'm looking for a breakout over a level or something like that. And if I see a bunch of sell orders right there from the level 2, the ask side, we can start to say, I need to see those sell orders disappearing or getting filled to know if we're going to break this level. Same as if I'm buying a dip, I want to start to see a bunch of orders on the bid side at the point that I'm trying to buy the dip at, because these are the orders that are sitting on the book. And they're the ones that have yet to have their effect on the market. Time and sales, they've come and gone. We're late. Those orders have already happened. Yeah, my less common indicators ones where I talk about B bands, hourly 20s, things like that. Yeah, it's around. If it hasn't been posted, I'll try to make sure it gets posted. Maybe shoot me a DM and remind me. And I'll try to, if it's not posted, I can at least try to get it sent over to you so you could watch it. Level 2, level 2 is available to everybody. All you got to do over here, right-hand side, you just click on level 2. The level 2 data will be there. Obviously, you need to have real-time data available on Thinkorswim. But It's available to everybody. What are the benefits of looking at time and sales? Well, if you are an exclusive data trader, you trade book maps, you trade volume profile, you trade level twos, you trade time and sales. It can be helpful because you can see those orders getting filled. You can match them to the book. You can know what's going on. For the average person trading that is not focusing more on we're focusing more on things going on the chart, not necessarily, like the order book and things like that. It doesn't offer us a ton. It's not an overly helpful thing because, as I said, those orders are oftentimes or always already been filled. So they've had their effect on the market. Where it can maybe help us is if we're watching level two, we start to see, a bunch of bid orders show up right at a level. We're trying to break over a level. Then we start to see time and sales filling. So what time and sales is showing us is if it is green, that means that the order was filled at the ask or above while the market was moving up. So that's it. It can be you sold at the ask while the market was going up and it'll appear green. So if we see orders and we match orders and we're able to say this buy order was filled at the ask while the market was moving up and it's a bunch of them, then we can kind of start to match it up and say, okay, these are buyers and they're trying to push it. Will it be extremely helpful? No, it will more than likely confuse you because you're trying to watch too many things. Uh, you level twos, always somewhat helpful. I recommend if you're trying to learn this, and this lecture got a long way from trend trading. I recommend if you're trying to learn level twos, watch the slower moving stocks. Watch your AT&Ts, watch your Coca-Colas. You can really watch those orders being placed, being filled, having their effect on the market in a much slower pace than something like SPY. SPY and QQQ, if you start watching their level twos and time and sales, it's for the most part just going to confuse you. You might start seeing these huge blocks of green orders, but they might be all sells and you aren't matching them up quick enough in your head level two and you're seeing green blocks on time and sales thinking that the market's going to rip when in reality it's people closing all their longs and they're selling while the market is going up. So, you know, is it crucial? Is it necessary? Not in my opinion. I also think that it is a widely misunderstood thing. Everybody thinks green on time and sales means buy, red means sell. And that's just not the case. Are there times green is buying? Absolutely. Are there times red is selling? Absolutely. But it is not 100% of the time. Do I take breaks? Well, no, but this is also my job and, trading as well as working in OT and trading in voice chats every day. So, no, 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 no breaks for me. Do I think people should take breaks? Absolutely. It is so easy to get burnt out. If you're having a couple of bad days in a row, the best thing you can do is not trade for a couple of days. Come back with a clean head, get your bad decisions and your stress out of your head, and come back to it. And what you're experiencing, less is always more. What I tell people all the time is one trade a day is plenty. That is all you need. If you can sit and patiently wait for your one trade a day to show up, you will likely have a very high win rate overall. And those one trades that you sit and you patiently wait and you let everything line up for will pay the best. So what you're experiencing of less is more is just the facts of the market. When people start, I always tell people you need to build confidence, but if you build confidence too fast, it's a death wish. And so less is more. Maybe you take a couple trades a week and then you move it up to 3 trades a week, 4 trades a week, a trade a day, because you start watching a few more things. But no matter what, sitting and waiting for the perfect trade, they aren't always going to come. But when they do, they pay big. Yep, crash miss, exactly, exactly. Yep, exactly. You and I have even talked about that. I think that was you and I that were just talking about that. Scalping her. I think you said, I think it was you that said it. Scalped my way back to freedom or something. I love that. And sometimes it is like that. You work your butt off to go from red to green to be $14 green or whatever it is. But if you sit and you wait for one or two trades, one trade a day, you're going to be super happy. Do I set a daily target? Absolutely not. Death wish. My goal for the day, $1 green, more than yesterday. If you have more than yesterday, your goal is accomplished. If you start to say, "Oh, I want to make $300 a day," maybe you're up 275, and then you take a couple of stupid trades trying to make your last 25 bucks, and all of a sudden you're only up 50 bucks on the day. Goals are the worst thing possible. Percentage goals, all of that nonsense, it's terrible. Don't get sucked into that, because that is when you make stupid decisions that make you lose more money. What you should do is say, my goal is to be patient with the market for one really good trade to line up for me, and my goal is to take that trade when it's presented. Win or lose doesn't matter. You wait for your trade to come for you, you act when that trade comes, and you take it. If the market provides, you take the trade. If the market does not provide, you do not take the trade. And so I think a goal is terrible. I think these people talking about, oh, 1% a day, 3% a day. Don't get me wrong. 1% a day, you 1,000% your port in a year. That's unbelievable returns off of very small gains. People trying to say, oh, I make 3% a day, they're lying. I like, that's just the simple facts. People don't understand that what 3% a day actually means, and how much money you make by doing that. And you know, it's just not realistic. Your goal is to get yourself one very good trade and take it. And that's it. No goals based on money, no goals based on any of that. Your goal is to find a good trade and execute that trade. Just as an example, just to prove, oh, I'm gonna show you guys. So this is something I use all the time, just to show this example. Hopefully you guys can see it. So here you go. Daily compound interest. How much money will you make? So here you go. You start with $1,000 port, okay? 3% a day. People try to throw around the 3% a day all the time. Uh, people try to say, oh, I trade 3% a day. Oh, I do it all the time. So when you do a compound interest thing, you have to say daily reinvest is 100%. That doesn't necessarily mean you're using 100% of your port every single day, but that's how you get it to say 3% a day. Include all days of the week? Nope, because we want weekdays. So if you have $1,000 port and you get 3% a day, you have 2.2 million by the end of the year. Does that sound real? Does that sound believable at all? Because it shouldn't, is the plain and simple fact. If somebody is telling you that they are doing 3% a day, it is very, very likely not true, because you have to realize you were talking like 100,000% gain or whatever it is on your portfolio in a year. That is not real. So don't set those gains. Don't set that dumb kind of stuff. Even 1% a day, very achievable on a small port, blah, blah, blah. 1% a day, $1,000 port, you got 13 grand at the end of the year. Is it huge money? Is it going to retire you? No, but you got an extra $1,000 a month. And I don't know anybody that doesn't help, you know? So, you know, live in reality. That's what you got to do. Not everybody's green every day. Very few people are green every day. The people that are green every day are likely full-time traders that have the ability that when they do get, when they do go red on a day, they have the ability to find their way back green. But setting these wild goals, oh, shoot for 3% a day. Don't get me wrong, $1,000, you need to get 1% a day. Your first day, you got to get 10 bucks. Very, very reasonable, but somebody starts telling you, oh, I got a $10,000 port and I did 3% a day. Tell them that they aren't telling you the truth, because if you have a $10,000 port and you do 3% a day, you make $22.4 million. And if you make $22.4 million, what are you doing sitting in a Discord all day long? You know, that's the simple facts. Like, I'm sorry if you have $22 million. I love all you guys with all of my heart. If I'm making $22 million a year, I'm probably not hanging out in OT with you guys all day long. That's just the facts, you know? So always like, look at that 224,000% return on 3% a day. Take that with a grain of salt, you know, have your realistic targets. Your realistic target, more than you had yesterday. If you've done that, mission accomplished. Like your job is literally done. So stick with that. Oh God, we got Norberto in here. Okay, well, if that's going to do it, everybody, thank you so much. Great class. I know we kind of got off there a little bit off the rails there at the end. Uh, but appreciate all you guys for being here. Love your questions. You know, that's I don't care if we get off track. You know, I want to help all you. I want to teach you guys about anything I can. Teach you to live in reality. Don't set those wildly outlandish goals. Just trade, you know, make your money, be happy at the end of the day. You got nothing to prove to anybody. You don't need to go blessing nobody's cash apps, none of that, you know. If you make your little bit of money, be happy. That's what we're here for. Yeah, thank you, everybody. Yep, Kath, I'll be in Pro VC tomorrow. I think I'm opening Pro VC tomorrow, and then I think I'll probably do a mastermind tomorrow afternoon in all honesty. But I'll let you know. I'll let you know. And as always, I'll tag you guys when I'm jumping in there. Yeah, thank you everybody. I really appreciate it. Nice words as always. I love you guys coming to my lectures. You guys keep coming and I'll keep doing them. So thank you so much. We'll catch you tomorrow, little Friday fun day. Hopefully make a couple bucks, lose a couple bucks. No matter what, we'll have some fun. Yeah, Crash must tag me. I always mean to. Check Core Wave. I don't even know what that is. Core Wave. Core Wafer? Scotty, owe you a DM. Like I said, I haven't forgotten. We're gonna get to you, don't you? Right. CRW. I love checking out the random Norvin stocks. This looks horrible, Norvin. Please tell me you aren't long on this. This looks terrible. It's like it's a fresh IPO. I mean, I guess we got a little trend break going here. Let's see. I'm gonna put the circle on here. I'm gonna put the circle on here for when Norvin asks me about it, because you always got to be able to come back and reference these charts, you know. So there we go. There we go. They're all-time highs. Wow, this thing is just a horrible chart. So we're dip buyers at 40, Norvin. We ain't long here. We're dip buyers at 40. Stops are going to be under our 36. We started to break about 44.72. We can start to look to be long. Moves back to 50 is what I would be looking for. Zero interest in a trade where it sits right now. This dip this morning, obviously that was the buy. There was your buy, you know, that was the spot to be getting in there. But zero interest for where we are now to be in any sort of trade on this thing. These candles are telling us nothing. Don't get me wrong, bulls definitely won the day today off of that low. But nothing to get long in there right now. Cashman's classic Northern pump and dump. ARM, I don't even care about. Overvalued junk. That thing needs to go down to 40 and then I'm a buyer on it. Thing is so grossly overvalued. It's like the PLTR of the chip world. It's useless. Or not what they do. They do important things. I'm not trying to deny that, but it's useless. This thing needs to come find itself. We'll see how these earnings go, but let's get a clobber on earnings and let's try to get in there 70 bucks, something like that, you know? Oh yeah, I mean, I haven't looked in a while. I guess, I mean, after this massive drop, it has to be much less overvalued, but it was appallingly overvalued. Now Marvell, now you're talking. This is a buy down here. I was actually just talking this with my buddy. I got a buddy in there. He got in there pretty heavy down here around this 50 zone over the last couple of weeks, because this one's sticking around. This is one to have a foot in the door on, actually, and at a good point for entry. Nice 57. I mean, I like it. I like it. This is a company I believe in. I got a buddy who's way smarter than me on all of this kind of stuff. And to me, this is going to be when we start to see buying coming back into that chip sector, obviously it's horrible. Like chips are terrible. I've been saying forever, not the trade. They look horrible, you know. But when money starts flowing into chips, as it will, Marvell should be a front runner, in my opinion. Yeah, honestly, Norvin, I don't hate it. Not today. You got to start buying on dips, Norvin. You got to stop buying on rips and start buying on dips. But yeah, 60 calls for July. I have a hard time seeing how this could not make money, in all honesty. Okay, well, if that's going to do it, thank you so much, everybody. I really appreciate you. I love seeing all these normal names in here. Burnt Peanut, always here. Clandestine Crash Miss, all of you guys, thank you so much. I'm sure most people have dipped out by now, but thank you for being here. Like I said, we'll catch you all tomorrow. Make some money, lose some money. Who cares? We'll have some fun. It's Friday, and we'll talk to you all soon. Thank you.